podcast. And I think today is a great time to be speaking with you, given everything that's going on with gold and silver and the rest of the precious metals. Gold was having a price decline last week, and I know that investors had a lot of questions about what was causing that. So from your perspective, what was behind that fall in the gold price last week that we saw?
A lot of information is secret in the precious metals market, spot purchases and sales, but you get the ETF data. And if you look at the ETF data, you saw gold ETF holders liquidate 1.6 million ounces of gold between the middle of May and late last week. And that's really was the major factor. So then you can say, well, why were they selling? And, I hate to say it, but one of the reasons they were selling is that the price has been falling since it reached its peak in February. And a lot of these ETF investors are not traditional buy and hold physical gold and silver buyers. They are more opportunistic. They saw the gold price rising after August through January, and they bought ETFs. They bought an enormous amount of ETFs in that 5-month period. And then since February, they've been just selling, and they accelerated their sales pace over the last 2 weeks, partly because the price was falling, partly because the stock market was rising, and partly because the economy looked better than they had expected it to.
Okay, I think that gives us a good idea of what was going on last week. And as we were having that fall in the gold price, it was generating, I think, a lot of discussions on whether we have seen the bottom for gold. So I'm curious to get your thoughts on that. Do you think the bottom is in, or can gold fall further from where we saw last week?
The price can fall further from where it is. I mean, we've been saying that we thought that the price would consolidate it in a very volatile range between April and August, through August. And the range so far has been like $4,065 last week, and say $4,900. The potential for it to spike down and actually touch 4,000, or even go down to 3,800, which is where a lot of technical people are looking, I think that's a reasonable bottom. But our view is that the price moves sideways in a very volatile fashion for the next 2.5 months. Whether it gets below 4,000, I don't know if that's going to happen. These are very volatile markets and very volatile and economically uncertain times, and investors are flopping around back and forth.
Yeah, I remember when we spoke in March, we talked about that trading sideways, but the price will be volatile. So it sounds like that's what we're going to be seeing, at least for the summer. What would you say is the upper limit on that range? We've talked about the lower, but what would be the upper?
Somewhere between 4,800 and 5,000, I think, is the range for the next couple months. We do think that it goes higher after August, into the final 4 months of this year.
Okay, and we'll get into that a little bit later. I wanted to speak about gold price activity that we're seeing today, because after last week's decline, this week we're seeing a rebound. We're talking on June 15th, so it's Monday. And yeah, I almost hesitate to bring it up because there is so much uncertainty, but I think it's worth talking about. And it's interesting to see your surprise at how people have reacted to the Iran war in terms of gold. I think among our audience, I've seen a lot of questions about why isn't the gold price higher when we're in this situation of conflict and geopolitical turmoil. So do you think that also ties into what you've been noticing about how people are reacting?
Well, yeah. And, we're in a tough period now. And one of the things that we pay a lot of attention to is the way gold and silver investors buy and drive the price higher in times of severe economic and political problems. And you saw this in the Depression, you saw it in World War II, and I think you're seeing it now where, there's an initial rush to buy gold and silver and the prices go up high. And then there's a pause when it's not that the chaos and risks and uncertainties and anxieties are normalized, but they are to some extent, I guess that, that's, I don't want to use that term because it's not like a long-term normalization, but there's a pause or a plateau where people say, okay, I've got my gold and silver. Now let's see what happens. And that's sort of where we are right now. And as far as we can tell, we're in a position where people have been buying a lot of gold and silver, in concerns about all of the risks, not just Iran, but all of the risks and uncertainties that the world's facing. The economy is showing up a little bit stronger than people thought. Employment data is showing up stronger. Unfortunately, inflation is also pointing toward higher prices, which is suggesting higher interest rates, which is sort of a headwind to some extent for gold and silver. So, you're sort of in this pause period right now. And again, we think that pause period could last for a couple months now before we see another wave of investor anxiety pushing prices higher.
This is going in a direction that makes a lot of sense. And talking about things being in stasis right now, I want to bring up also the Fed meeting that's coming up later this week. I think the very broad consensus is that we won't see a change in interest rates, but I'm sure everybody will be watching very closely the commentary from Warsh. So I wonder what you'll be looking at there. It'll be his first meeting as Fed chair.
Yeah, I think, he's got a really interesting position this week in that he has to convince, not the real people, he has to convince that he is an honest and intelligent and with integrity person are the other members of the FOMC. He has to convince them that he's serious about being an independent, honest, Federal Reserve Board chairman. And we've seen political hacks in the past, in the 70s, when we had very volatile inflation and economic activity as a result of a variety of issues, including politically inspired Fed chairman. So he's aware of that. He knows the history. He's going to have to convince the other FOMC members that he is a honest and intelligent person to be there in the chairmanship. He's got to convince financial markets and the broader economy. The consensus, the last time I looked at FedWatch, which was last Wednesday, so the last trading day, was 96+% assumed that that the interest rate would be unchanged. About 3% said that they thought there might be a 25% BIP decline, 25 BIP decline. And no one was expecting an increase in interest rates, which I think is probably skewed to the wrong degree. My view is it's unchanged to maybe even higher, because last week we had very high problematic CPI and PPI, and it wasn't just the energy prices. Obviously, the energy prices were very important, but if you looked at the other segments of consumer and producer prices, you had a lot of issues, and some of the issues with transport on the PPI. Transport's obviously more costly because of the energy costs of the fuels. So you've got a lot of problems. So Warsh has got to demonstrate that he can be honest and effective and independent.
So for gold, we've talked about the Iran war. We've talked about what's going on with the Fed. I wonder if those are top of mind for investors. For you, what other key gold price drivers are you keeping an eye on right now that we might be overlooking?
Well, obviously we're paying attention to central bank purchases and sales. You saw some pretty heavy sales by Russia and by Turkey. You take those out, you had some sales by a couple other, like I think 4 other countries in the first quarter. No other country was selling gold in April. If you look at the buy side of the ledger for central banks, you've seen more central banks buying in the first quarter. They backed away in April, and they seem to have backed away in May as well. But you are seeing central banks continue to buy. They're perhaps reverting more to price sensitivity, waiting for the price to fall. And so we're watching that. We're watching overall investment demand. I mentioned the ETF investments earlier, I think. But we're also watching physical demand. Physical demand is really messed up in India right now because of the economic stringencies caused by the fact that the Indian economy is heavily involved with both imports and exports from the GCC, from the Persian Gulf region, including Iran. And the war and the trade disruptions have really hurt the Indian economy. They're starved for foreign exchange. They put on import controls for gold and silver. And you're seeing investors who hold enormous, there's more gold and silver held by investors in India than any other country in the world. But what we've seen over the last year, and it's increased this year, is they're not selling the way they used to. There used to be a flow back and forth that those people who hold gold and silver, if at all possible, they're holding onto their gold and silver and they're using their rupees to live right now. So you're seeing, kind of a mixed investment demand picture there. In North America and Europe, you've seen a fair bit of physical selling, more so in silver than in gold. But there have been investors who have been taking profits at what are record prices, and they say, oh my God, gold's down $1,500 Friday from its peak in January. Yes, but it's higher than it's ever been prior to October. So there are any number of investors who bought a long time ago at much lower prices who are saying, I'll take my profits here.
I think that helps give us a picture of what's behind gold. And so we talked about how this summer it looks like gold is going to trade in that range that we spoke about. But you're seeing higher prices toward the end of the year. I wonder, is there a specific trigger that you think would break gold out of this range? How are you looking at that?
Well, there's a whole bunch of things that we're watching, and it would be some combination. People always say, what's going to cause the next recession or what's going to cause, and it's always a combination of factors. And so it's a combination of factors. We are looking for weaker economic trends in the third and fourth quarter in the United States and elsewhere. We are looking for the U.S.-Iranian war to actually continue.